And you think about it, you work your whole life and everything you accumulate, it's already taxed. It's already
tax, man.
taxed the second time on the way out when you go in the grave.
40%?
40%.
You're basically being taxed 100% because it took 40% at the beginning. Now
There you
you're going to
go.
take another 40%, take 80% of my money?
Yes.
There's definitely things. You can make your life insurance policies not taxable by setting up certain types of irrevocable life insurance trusts.
Today's episode is brought to you by Security Financial Management.
Welcome back to Best Advice Podcast, guys. I'm your host, Rob Lavalio. Here, as always, with founders at Security Financial Management and Dave Allen, Frank Ravalio. Gentlemen, what the heck is cracking, man? You like the new studio?
I do. This is awesome. This is kind of cool. I like the chair, I like the flowers.
That is so cool.
I like it all. I like the fireplace.
Yeah.
It's an upgrade, man.
Does everybody know our office is under renovations, under renovation. So we're in Frank's living room right
This
now.
is my living room. That's my wife put the little sailboat up this morning for viewer pleasure. So
That's
we're
actually a TV back there.
so we're ready to go. Today we're gonna have some fun, and we're with this new bill that just came out. We all know it's big and there's a lot to it. Dave and I thought we'd break it down a little bit. And what are we gonna call it, Robert? Little bites of the big bill.
Little bite of the big bill.
Little bites of the big bill.
Little bites of the big bill. So
You
today,
get two little bites. of the
little
big
bites. And as per normal, everybody knows I like to go first. And Dave's a good man.
Bad choice.
He He lets me do it. He lets me do it. So I'll start
Just
with.
go.
Yeah, I will. And then I'm going to do a piece, and then Dave will do a piece. And the two things we're going to talk about today are the two bits. Or my little bit is going to be on SALT, state and local taxes. There's been some significant changes there. And then when I'm done, Dave will talk about some of the estate grandfathers. There's been some changes on the estate
Don't tell
law.
him my stuff.
I won't. I won't tell. I want to.
He always does. Frank
want
has this
to.
tendency to we divide our parts up, and next thing you know,
I finished.
he finishes what he said, and what he said.
That's right. That's right. And that usually works well. But I'm going to be good today to do mine. So state and local taxes will be my little bite of the
Salt.
cookie, right? It's called SALT. And the big change is for about the last, several years, it's only been $10,000 that you're able to deduct. And for people really, here too, but a lot of California properties, New York, up north, Maine, more expensive properties, Florida coastal properties,
Getting there.
and Florida, depending on where you live. But typically they'll talk about California because those are probably the highest priced houses in the country in certain parts of the Northeast. But anyway, it's been about 10,000. So let's just say you live in Orange County, California, and you live near the beach. Well, that tax might be, I'm just going to make stuff up, but it could be $70,000, $80,000, $90,000 on a coastal property in California. Even if you're inland, it could be $40,000 or $50,000 of tax. So 10 grand didn't go very far. And part of the
Maybe
negotiation.
the 10,000 is deducted off your taxes.
That's right. $10,000 is deducted. Didn't go very far. So what happens is in the negotiation, which we know very little about, but you hear all the senators in the House and Congress, they're beating each other up. And depending on what state you're from, so if you're a California representative or maybe a New York representative, you're going to fight like heck to make sure that goes up before the bill gets passed. And that's what happened. So enough people from those states that it really mattered got together and told the folks, hey, if you want this bill to pass, then we're going to make sure that you're going to take care of our constituents in our local area. And they got it through. So here's what happened. Instead of $10,000, which it's been the deduction on your taxes on the state and local taxes, it's now $40,000. So that's a 4 times increase, which is pretty good. There's always the government giveth and the government taketh away. So give me a minute and I'll tell you a few of the nuances. But at first blush, you go, okay, wow, 4 times, that's huge. And it is, but really, if you make 500,000 or more, there's a little bit of what they call sort of a nuance where it goes down. So let me give you an example, because examples are the best way to do it. So at $500,000, it starts to taper off. And here's really how the rules work. I'll give you an example because examples are usually the best way to kind of understand how it works. So let's say that it's MAGA, modified adjusted gross income. And you can look that up, and it's gross income, and the government throws a few other ways to knock it up, because the higher it is, the less benefit you'll get. So 500,000 of MAG or greater, it starts to taper down. Here's how it works. So let's just say you made $500,000, gets a 30% reduction. If you have make 550,000, 30% of $50,000 is $15,000.
Yeah.
40,000 minus $15,000 is a $25,000 state and local tax deduction. So the way that would work is once you get over, I think it's 600,000, it's pretty much back to 10 grand. You can never be zero.
Yeah.
It'll revert back to $10,000.
So it's basically to help the middle class.
But, that's actually well put, because if you're 500,000 and up, you at 600, it's zero. So basically, I think what
500 is a healthy,
healthy number.
income.
For
Yeah.
sure. I mean, if
Maybe upper middle, because 500, 3, 4, and $500,000 incomes are a nice income. But to your point, it's for the masses.
yes.
It's
up
not
to the 1%.
That's right. That's exactly right. The 1% and 2%, probably the top 5% won't feel it, but 95% is a good number, right? And guess who votes for you? Guess what wins an election? 51 or 52% wins an election. 95% is happy.
Yeah.
That's how they work.
That's
So,
right.
that's what we'll say, and we'll come back and visit that. But Dave, if you want to launch into
Yeah.
or what would you like me to talk about it?
No,
Okay.
no, the estate's actually pretty simple, and it's an amazing accomplishment that happened. Is what it was currently is 13.99 million. So if you were to die today as a single filer, your estate would not have to pay estate tax on 13.99 million.
That's a lot of money. Think about
That's a lot of money.
Pretty good.
And everything above that's going to start getting hit, anywhere between 18 and 40%.
Unless you have a spouse, right?
Yes.
See, I'm getting used to
See,
it.
he's doing it again. He just did it
I
again.
got excited.
Okay, calm down.
I
Yeah,
can't.
I think I know. I did.
I can't.
So anyway, 13.99 million, but it was about to go to about 5 million if this didn't get passed.
Big gift.
And that's massive. And think about that. You have a $10 million estate, which, I mean, these days, if you've lived in your house for a long time in a nice area, you have a life insurance policy,
401k for 40 years.
401k, and there's $5 million. Everything over 5 was going to start getting hit. That extra 5 million, think about that, 30-40% of that amount.
Think about that. So 40%
That's
of
$1.5 million.
is $2 million on 40%. So, and you think about it, you work your whole life and everything you accumulate, it's already taxed.
Already
tax, man.
Taxed the second time on the way out when you go in the grave.
40%.
40%.
You basically be taxed 100% because you took 40% at the beginning.
There
Now
you
you took
go.
another 40%, take 80% of my money.
Yes.
Hey, it
If you don't
beats
do
what
it,
happened.
they hate
It beats what happened in Saudi Arabia.
That was insane.
But it's true.
Well, at least we can land.
But you can plan.
But you can plan. So now what's happened with this big new bill is that it's gone to 15 million. It's locked permanently at 15 million, starting in 26. So right now it's still 13.99, but it's going to go in 26 to 15 million locked in, and there'll be some escalations on that. So if you're a married couple, it's 30 million you can pass on indefinitely. So
That's a big difference, right?
it's a huge.
Think about that. 30 million versus 15.
Yeah.
There's some of our clients that had worked really hard and built some network were very, very worried and starting to think about the planning that they were going to have to do. But this eliminated many of them from having to make those changes. But that still doesn't, if you do have a sizable estate, you should still get with a qualified estate planning attorney. Think about things like gifting, certain types of trust planning. There's certain ways you can ladybird deeds and things like that you can do with your home so you can live in it indefinitely, but it's going to be out of your estate. There's definitely things. You can make your life insurance policies not taxable by setting up certain types of irrevocable life insurance trusts. So there's lots of things you can do, and we always highly recommend getting with a qualified estate planning. If you're working with a group like Security Financial Management, we actually sit in those meetings. We help you plan. We have ideas. We're participants. We actually can interpret or translate what a lawyer says
Sure.
because they talk in legalese,
Yeah.
and we talk in humanese.
Yeah. And we've been Dave and I,
Like Cupid.
yeah, Dave and I we're the gray hairs settled in, but we're 40 years apiece in this industry. So in the 80 years we've been doing this, I've probably sat in 1,000 legal meetings easy. and Dave sent in 1,000 legal. So we've got 2,000 meetings. Doesn't make us lawyers, but it makes us understand what they're saying.
We're not lawyers, but we play one on TV.
That's right. That's right. Hey, Dave, I had a thought. Since these are little bites of the big go, do you think we should take a little bite of a cookie?
It's a healthy vegan bite,
Yeah,
so why not?
It's got no sugar in it.
So we will do that.
Well, I have my own cookie, so I don't have to bite yours.
You have the one that's already had a bite out of it.
So what we're going to do is we're going to have little bites of the big bill, and we're going to do this every couple weeks. So here's to the first big bite.
Oh. Hey, girl, how about a bite?
Remember, folks, secret to wealth is not what you earn, it's what you keep. Happy days, everybody.
This podcast is for entertainment and educational purposes only and is not intended as personal financial advice. Before making any financial decision, please do your own research and consult a financial advisor as needed.